this option and that option. We are itching to get there, to talk about investments. We will get there, guys. But the point is that if it's going to be a long journey, we have to first clear the hurdle so that we can sprint faster, we can move faster. Otherwise, we'll just trip and keep falling. That's something that we don't want to do, and that's precisely why we're spending a lot of time on understanding how to manage risks. Okay, so one important tool that we all know of in risk management is insurances. So if it's okay with you, I'll share some very okay, don't worry, Deepa. It's not the end of it all. We have solutions here. We can manage most of these risks, and it's not. We just need to understand what risk management solutions are available. So, is it okay we move on and talk about some basic insurances that most of us will need in our lives? Some basic insurances, and if there are questions, I'm happy to answer them. But this is a knowledge that we all really need. Okay, so let me just go on with understanding some very basic insurances. Term life insurance. Do you all have term life insurance? Term life insurance is useful when untimely loss of life happen due to any reason. It can be any reason. The earning members and homemakers need life insurance. Coverage needs to be at least 10 to 12 times annual income, and this needs change as the life stages move, because early on in your life you may not need that much insurance, but when liabilities increase, when children come, when dependents increase, your life insurance needs will increase. But as you as your life as you get closer to retirement, your need for life insurance will reduce. You pick for a maximum possible period of 30 to 40 years, and it can be discontinued later. Pure term plans are the cheapest. Term life insurance. So, Krishna, you're asking a question. Term life insurance are simple life insurance policies. So, what is an insurance? An insurance is just a protection against a risk. We know that we've just gone through that activity to understand what risks we are facing in our life. And one big risk is loss of life. Ahead of time, when you're earning or a key earning member in the family loses life, the family is rendered in a lot of financial trouble. To protect the family from these financial troubles, you take something called a term life insurance, and this comes in very handy when untimely loss of life happens. Okay. The term life insurance provides only protection. There is no investment angle to it. It's like taking insurance for your car. Okay, you drive. The deal is very simply, you have a car insurance, you drive your car around. If there is an accident for the car, the insurance company pays you some amount to make your car all right. If there's no accident, the insurance company takes the premium and goes home. It's their profit. Okay, so you pay it as an expenditure. Just because you paid the premium, you don't expect to meet with an accident in your car. So just like that, a term insurance is an expenditure. You just pay the premium and hope nothing happens. Let the insurance company make profits out of it. You don't want that money. Do not expect to get anything out of it, but take your insurances. Is this clear? Praneet says, I have insurance policy, but not a term insurance. Why is a term insurance important, not any other insurance? Because you will need 10 to 12 times your annual income. So Praneet, you can just go back and see how much is the life insurance cover that you have. If it's not 10 to 12 times, you need to take another policy. Now, for most people, buying 10 to 12 times your annual income in an endowment policy will be very, very expensive. A term policy will be much cheaper. So if you're age 35 and you need a 10 crore sum insured, the premium will be about 15 to 20,000. Okay, if you're paying anything more than that for a 1 crore insurance, you know that it's not a term life policy. Yeah, about 15 to 20,000 rupees per year for an age of 35. Yes. So that's how less term insurances cost. We're talking about 1,800 to 2,000 rupees a month to protect your family. Okay. If there are any questions here, happy to answer them. This is something that we all need. Mandatory term life insurance. If you're earning, both earning member and homemakers need life insurance. Children don't need life insurance. Senior citizens who've retired, they may not need life insurance, but all earning members during your earning term period, you will need life insurance.
Is there a definition of this term, or does it mean life?
Term, it means time. So yeah, it just means time. So that life insurance policy is valid for a certain period of time, 15 years, 20 years, 30 years, right? So at the end of 30 years, the policy is over.
Okay.
That's what a term life means. Term just means time. Take it for as long as possible. Take it for a 20 or how much ever long you can get, depends on your age. For age 60 you may not need, so that's why you should understand what your coverage is. The life insurance needs change as your life stages change. So it's a great idea to understand how much life insurance need. I've given you here a 10 to 12 times annual income at the peak of your earning life, somewhere in your, no, I'm not saying peak of your earning life, somewhere in your 30s, 35s, 40s, when you have dependents, when you have liabilities, usually that's the cover. But your specific life insurance need will change as per your life stages change. So you might want to, I'll give you a quick calculator to calculate how much life insurance you might need, and you could buy that. Are we good with this? Can we have a quick quiz to understand our understanding? To understand our understanding. Can you put that poll out, Kajal?
Yes, I did. It's on the screen right now.
I see the poll.
Oh, you do. You don't see the reports, is that so? You don't see the results. Yeah, okay.
Okay, we have the answers. Life insurance is a replacement of your income. There is no need for it if you do not have.
74% answered no.
Yeah. So there are some point of views coming here, which is very, very valid. If you do not have dependents, then you may not need life insurance. If you have enough money to support your dependents also, you may not need life insurance. Right? If you're financially free, you have enough money coming in, passive income, family can be taken care of, children can be taken care of, you have that 10 crore in wealth, you can dump your life insurance policy. So that's precisely why you said you can discontinue it later. You can discontinue your life insurance policy when you've reached financial, when you're dependent, you don't have dependents anymore, or you don't need money to support. So loss of life is not going to impact people financially, then you may not need it. But this is just an indication for most of us to understand 10 to 12 times at least. If you have. Oliver, it's a very valid point. Thank you for sharing. Okay, so quiz answers. Did we get the answers?
Yes, 74% said no.
What was the question?
This was term insurance. Do you need life insurance cover after your retirement?
74% said no, the others said yes. Okay. Good. So interesting to know. Some people think you need life insurance after term life insurance. You might need a whole life policy or something. But a term insurance is typically an income replacement. So if you don't have income, you don't need term insurance. Okay. Another very important insurance that most of us need is health insurance. So health insurance, how many of you have health insurance from your company apart from what your company offers? So it's very important for us to understand. It's very useful when illness or accident requires hospitalization. Reimburses the costs incurred. It only reimburses the costs incurred. And it's very useful when hospitalization is required in case of an illness or an accident. So these are things that come in the way of your wealth creation process. Okay, so if you build some wealth and then you go to the hospital, you take that wealth and you give it to the doctor, then your wealth creation process gets impacted. So this is the hurdle that we are removing. Get higher coverage through a base plus super top-up policies. These are some things I'm just throwing these jargons to you so you can write them down and speak to your insurance advisor about it, understand what a term insurance or Google about it, understand what a base policy is and the super top-up policies are. All members, dependents, including children and parents, need health insurance. So in life insurance, we spoke about key earning members needing life insurance. Children don't need life insurance. Senior citizens don't need life insurance. But for health insurance, everybody needs health insurance, as much as you can. It's possible that you may not get health insurance for parents, but that's another problem that you find out how to cover their insurance needs. But everybody needs health insurance. Health cover for a family of 4 might cost something like this. Premium will be approximately about 30 odd thousand rupees. If you're age 35, you're a non-smoker and you have no pre-existing illnesses, a base individual policy of about 5 lakhs and a top-up floater policy of about 15 lakhs for the whole family will cost anywhere between 30,000 to 35,000. If one have These two. Sorry, Vikrant, I didn't understand your question. Is it enough if you have these two? Is that your question? Vikrant, you can unmute and ask your question if you have anything, or you can chat, no problem. Whatever works for you. But this is an important
Yeah,
point.
hi. Sorry. I think it just went through half baked.
Okay.
I just wanted to ask that if one has it through the employer, both of these two, is it suggested to have it personally as well?
Yes. Please have a separate policy as well. Don't only depend on the employer's policy, because employers usually give group policies. Okay, so in a group policy, there are a few situations that might happen. One is the group can choose to withdraw the benefit. Okay, they can say, okay, I'm not giving this anymore because my expenses are too much and I can't handle it. We've had that happen in our lives. They said, okay, parents are covered in the policy. From next year onwards, parents will not be covered. Okay, so those things, the group decides the dynamics of that policy. It's not in your hands, and the insurance might just go. Number two, you can choose to withdraw yourself from the group. You can choose to quit. You can choose to do something on your own. Your new employers may or may not give you insurance cover, or if you're going to be your own employer, then you'll have to fend for this yourself. Number three is that, yeah, you can be asked to go, so the group can remove you. So these three things can happen. The benefit can go, you can remove yourself from your group, or the group can remove you. Right. So to avoid the situation, as you grow older, getting insurance, forget the cost of insurance. The cost of insurance will go up as you grow older, but getting insurance will get difficult because you might contract some pre-existing illnesses, or just getting an insurance might be difficult. So it's a great idea to put it in your budget, have health insurance for yourself and your family, apart from what the employer gives. Okay, so the base policy of
Poona,
7
if I
lakhs.
may,
Yeah.
if I may just add one more thing, there is also a very huge probability in times of transition. So when you left one job and you are before joining the second job,
Correct.
even though it may have, that is also a very critical period. If you get any hospitalization or something like that, then
Absolutely
that is
pertinent.
actually could completely
Very well.
ruin your savings.
Thank you. Yes, Divesh, I think that makes a lot of sense. Of course, employers will cover you till the last day of your employment. But the new employer, if you have a gap period, you're taking some time off, you're just taking 1 month off to go on a holiday and then join your new employers, those things, transition period, I think that's very, very pertinent. Thank you so much for sharing, Divesh. Have your own policy. That's the point. Praneeth is saying we have a coverage of 7 lakhs from the corporate, and then we have taken a top-up insurance of 10 lakhs with a small premium. That's not enough, Praneeth. It depends on 10 lakh top up. What is the base? What is the deductible on that policy? If the deductible is 7 lakhs, then that's not enough. If it's a low deductible, let's say it's a 1 lakh or 2 lakh deductible on the policy, then it means that you are self-insuring yourself for 1 or 2 lakhs, and then the insurance company covers up to 10 lakhs. Again, I'm throwing these words out to you. You might want to write it down. We can discuss this. Talk to your insurance advisor about it. He might be able to clarify this. But a base policy and a top-up policy outside of your employment is still mandatory. Okay. Look out for sublimits, waiting period, pre-existing coverage, deductibles, and copay. So these are a few jargons also. What are sublimits? What is the waiting period? What is pre-existing coverage? The waiting period, usually you may not be able to claim for the first 30 days on certain things, right? The first 90 days on certain things, or the first 4 years on certain things. So if you have a pre-existing illness, right? So for example, I have blood pressure, then for the first 4 years, I will not get any kind of coverage for anything related to blood pressure. So these are important things for us to understand. Have health insurance, and then you can just imagine how easy that would be. Thank you. Okay. So disability insurance, useful when earning member is disabled temporarily or permanently due to illness or accident. So this is another big danger, permanent or temporary disablement. It pays off a fixed sum of money. It's a sum insured to the loss of income. It covers loss of income and medical costs till recovery happens. And coverage needed is at least one-time annual income. For somebody who's 35 years old with no pre-existing illnesses, a sum insured of 25 lakhs, the premium is anywhere between 15 to 20,000 rupees. Look out for policies that have a wide coverage and understand the exclusion. So there are very specific policies that say cancer care only, right? So it's better to take an insurance for critical illness that has a much wider coverage because you don't know what's going to happen. So you covered for cancer, and then if it's not cancer and something else that just costs as much or leaves somebody jobless, then you don't want to be excluded having paid the premium. So policies that have a very wide coverage and understand exclusions so that we know what you're covered for and what you're not covered for. It's useful when earning member is disabled. Is this clear? Any questions on this? Disability insurance. So there are two types.
Bhuvna, I have a question here.
Yes, Tanvi.
So sometimes the term plan, it comes with an additional benefit if you can pay for that rider. That's the disability.
Yeah.
So is it good enough just to take that rider, or should somebody go for a special disability insurance?
Okay. So disability insurance are primarily of two types. One is a critical illness and the other one is the accident. So disability due to critical illness or disability due to accident, right? So they both of them come as riders. You might want to just discuss this with your insurance agent about it. There are advantages on taking standalone policies. There are some advantages of taking them as riders. As riders, you enjoy the benefit of a consistent premium throughout the period of the policy. But as an individual standalone policy, your your premiums might get rated up. So it's a good idea that you're asking this question. Just check with your insurance agent on whether you should take a standalone policy. A standalone policy is preferred over a rider because a rider is contingent to the base policy. If the base policy, so for example, let's say you have a term insurance and then the term gets over in 15 years, right? The critical illness rider also will go away. But you may need critical illness for another 30 years because when you grow old, critical illness is fine, but you don't need a term insurance. Right? So it's a great idea to have a standalone policy. So there are advantages and there are disadvantages. Just discuss with your insurance. A standalone policy is a much better idea. Yes. A personal accident insurance also, Alok says that the disability due to an accident, a temporary disability or a permanent disability due to accident are real. Yeah, great. Property insurance useful in case of fire, earthquake, riot, burglary, explosion, lightning, structure of the building, and it covers the structure of the building and the contents inside the house. The largest item on most people's balance sheet is the house. You would agree, right? And so if you can cover your policy, these are very, very cheap policies. A 40 lakh reinstatement cover for a structure and 7 lakhs cover for whatever inside the house costs only 3,000 rupees. And you look out for add-ons like alternate accommodation up to 12 months. So these are things that you might want to discuss with your insurance agent, whether you can get your property insured. This is one of my largest items on my balance sheet. We've had instances of these things happening. In 2015, there were floods in Chennai. One of our cars got washed off. Then there are, we've had fire breaking out in our property. I mean, in a 31st floor in our building. So these things happen. So it's a great idea to get your property insured. Can we have the quiz? I think we missed a couple of quiz. Kajal, can you put out the quiz?
I've put out the health insurance quiz.
Okay.
Can everybody see it? Oh, yes. Okay.
Yeah, okay. Can we have the answer? We'll have to read out the question.
Wait, let people are still responding. Just give me a few seconds. Okay, so health insurance, if you have a health insurance cover of 5 lakhs and you have incurring expenses of 3 lakhs in the hospital, how much claim are you likely to get? 65% people said most likely less than 3 lakhs.
Correct.
And 31 mostly said 3 lakhs.
So you most likely get less than 3 lakhs because there'll be some kind of a copay. Some expenses will be excluded. So, they don't cover. For example, in COVID, one of the biggest items in many people's list was PPE, the suits that they have to wear, right? So that is not covered because they're called as consumables and it's not covered in an insurance policy. So usually it'll be less than what you've spent. Yeah, correct. Perfect.
The
And
next one on disability insurance. Can
yeah,
disability insurance be taken for children and senior citizens?
yeah.
Okay, we're getting responses now. 61%, 14 people said yes, and balance said no. So 61% majority said yes, we can.
You can get, or should you get?
You can, yeah, so it can be taken for children and seniors. Or should you get it?
So yes, so let me correct this understanding. The disability insurance is an income replacement policy. It is to replace income. So if there's no income, there's no insurance. Okay, so children, you will not be able to establish that there is a source of income. So if something were to happen to them, what is the financial loss for the family? Right, so you will not get insurance for children or for people who are not able to establish income sources. So it's just for your understanding. So somebody, you will have to establish salary slip or ITR to get disability insurance. Yeah.
Yes.
Here, Guna, can
Yes.
I add something?
Yes, please. Deepa is an insurance expert. Yes, happy to hear from you, Deepa. Yes.
As in your slide, disability insurance was the accidental disability as well as it was talking about the critical illness. You highlighted both things in one slide, right? So critical illness, right? Critical illness insurance we can take for senior citizen as well as children also, but only about the accidental disability insurance. That is for a earning member, because there is a difference in term insurance. We have to submit the income documents before taking the plan.
Correct.
And in disability insurance, we have to give income proof at the time of claim. So depending on your income, the disability benefit is given to the person.
Okay.
So whatever the losses you have suffered, those losses are covered up to the sum insured. And due to that, the disability insurance is only given to earning members.
Yes, the disability. So that's a very valid point, Deepa. You may get the insurance, but you may not get the claim. That's what you're saying.
Yeah.
Yeah, if you cannot establish income sources, you may get the insurance, but you may not get the claim. Right.
So critical illness you can give to your kids as well as parents, but the accidental disability is only for earning members. That is what I wanted to add.
Great. Okay. So Deepa is an insurance expert. I take her word on that, and thank you so much for sharing, Deepa. Yeah. Property.
Yes. So property insurance, do you need to take insurance for the house if you are staying on rent in it?
That was just some random question. Okay. Answer?
87 people, 87% people said no, you don't need to.
Yeah, just insure whatever's inside. If you have some really fancy things inside, you might want to insure things. Contents, yeah, only for the contents of the house, but not the structure of the house. So you can just take property content insurance. Yes, Neelam says it's right. Only for whatever is inside the house, for the jewelry or for the electronics or for some art or whatever you have in your house, then you can take insurance for it, not for the structure. Correct? This is another new insurance that Deepa was sharing with me on identity theft. Now, this has become a really big thing. So you guys might want to just find out what more about this on identity theft. So these days, people, I had one of our clients saying that his PAN card or his PAN number was taken by somebody, and he borrowed against his PAN and not repaid the money, and his credit scores were deeply impacted. And that fellow borrowed and bought a BMW while this person still drives an I-20. So those things are happening. People are taking money out of ATMs. They spamming, sending spam emails. So there's a movie also about it, right? So there's a lot of this thing happening. Identity theft insurance. So you can take insurances for that as well. I'm sure your insurance agent will be able to give you more information. Okay, this is just to give you some insights on possible things that can come in your way of creating wealth. This clear? So we spoke about term life insurance. We spoke about health insurance. We spoke about critical illness insurance and accidental disability insurance. We spoke about property insurance, and we spoke about identity theft insurance. These are things that I'm leaving you guys with as opportunities that you can use, or tools that you can use to protect what you already have. Krishna is asking, can I take insurance on a home which is in mine? You can take insurance only for the contents inside the house, Krishna. You have no insurable interest on the house that you don't own. Unemployment insurance there as well for any rainy day. No, Vikrant. For unemployment, you'll have to create an emergency fund. I don't think there's any unemployment insurance, at least in India. I don't know. I mean, if you're in Philippines or wherever, are there unemployment insurance, Deepa?
There are some plans in personal accident cover. They cover a few months of unemployment. Loss of job is an additional feature which we can add up with by paying some extra premium, which is a little bit of a premium, and then we can have that feature. And a few months, 6 months, 3 months cover we can give for that.
Interesting. Okay, but then the reason for unemployment should be the accident.
Loss of job is the main thing. If some person loses the job and he has covered those things.
Yeah, but loss of job should have been because of injury. If they lose the job because of underperformance, that possible?
No, definitely not. Yeah, sure.
The accident, if it comes as a rider with an accident insurance policy, I'm presuming that it will be accident ho gaya, so job loss ho gaya, then you can get some insurance.
That is covered. Correct.
So Vikrant, if that answers your question. Sriram says there is an insurance cover for unemployed limited to repayment of loans. The cover is for repayment of EMIs to the tune of period of unemployment. Oh, is that true? Okay, can you give me some more information about this? Unmute yourself and speak, please.
Yeah, so basically this only covers the repayment of EMIs. So this is a product which most of the lenders have tie-up with insurance companies. So in case you have a loan and you want to have a cover, in case you're salaried, then you can pay a small premium because we are typically, because it covers a large segment of the lenders' borrowers. So it's kind of attractively priced, and it covers only for retrenchment or termination of employment. I don't
only for retrenchment, is it?
Yeah, it probably covers it retrenchment. So there are clauses which covers it, but you have to get in touch with your lender, and we may. I don't think. Typically borrowers go and buy it directly.
Okay. So it's something that the lender takes for you, to protect their own.
The premium is paid by the borrower.
So the premium is of course paid by the borrower. So there are no free lunches. But then it's like the mortgage redemption policy that in case the lenders were taking on the life of the borrower, but now they're taking it on the employment of the borrower also. Right? Okay, interesting. Okay, that's great learning. Sriram, of course, is a loans and recoveries expert, so he'd know these things very well. Okay, great. So any questions on this, guys? On insurances, so this is a great way of, if you've been worried about the first part of the session, then these are tools that you can use to clear the hurdle so that then we can start sprinting to our 10 crore goal. Okay, now I want you to event has now become an emergency. Praneeth says, just found that Policy Bazaar has an employment insurance. I haven't gone through it, but it's there. Okay, great. Praneeth, would you like to share that in the group? We can have a discussion with that. That'd be great. Yeah, share it in the WhatsApp group so we can at peace read through and then. Thank you. Yeah, great. Guys, this is amazing. If you find anything of use to the rest of us, please share it in the group. Yeah. So emergency funds are a very, very useful, critical step in the whole process. So putting 6 months money away. Yeah. Yes, Divesh. So it turns what would have been a minor event into, a major emergency into a small inconvenience. It's fully capable. If you have that kind of money stashed away, you can turn what would be a major emergency into a little inconvenience. Okay, the car is broken down or the house needs some kind of a fixing. What could have become a major emergency now is a small little tiny inconvenience. Okay, if you've carried that umbrella and gone, the rain is an event, it's just a little inconvenience, it's not an emergency, right? So if you can put that money away for emergency, that'd be the first step. 6 months, 6 times monthly living expenses. This is precisely why it is there before investments in our 9 steps. So if you remember the 9 steps, the first one we're saying put 1 lakh away, then we're looking at paying off all the non-mortgage loans, and then we're talking about putting away 6 times monthly living expenses. So 6 times, if my monthly living expenses are 2 lakh rupees, including all EMIs and loans and all that. If I've paid off my loans, then I'm just putting away my mortgage loans, then I'm putting away 12 lakh rupees in savings for my living expenses. Right? When can you use this emergency funds? Ask yourself these questions. Is it unexpected? If it was something that you expected to happen, you save up for it. If it is unexpected, you can use the emergency fund. Is it necessary to fix this? If it's not necessary, you can skip. Or is it urgent? Then if you have an answer, yes, yes, yes for this, then you use up the emergency funds, and then the next few months you're topping up the emergency funds, and at all point in time you're ensuring you have this 6-month kind of money put away. This is removing one big hurdle in your journey to 10 crores. Where can you keep this money? You can keep it in bank deposits, and you can keep it in money market mutual funds. If there are any other ideas, I'm happy to hear them. These are 2 things that I could think of where to keep your emergency funds. Okay. So,
Bhuvna, can I add a point here?
Yes, Neelam, yes.
Usually when people plan for emergency funds, they only plan for the EMIs and the household expenses. SIP is one thing that people immediately cancel when they face lack of savings or lack of money to meet their expenses. So I would recommend people to also consider SIPs as a part of emergency funds, so that your savings are also happening while you're sailing through the journey of life.
Okay, so that's an interesting point that you're making. So if it's an emergency and I do a lack of SIP, then my need for emergency will go up to that extent,
Correct.
right? And when I'm keeping money away for emergency, I would keep them in very safe places.
Correct. There are also mutual funds available in the market, you would be very much aware of, which are used for storing the emergency funds. I would just give an example. We have active account with Aditya Birla Sun Life mutual fund available, where up to 50,000 rupees can be withdrawn within a minute without any hassle. If you have made savings.
Money market funds?
Yeah, money market funds. So just as an example, that you can store the money in these kind of funds, where in case of an emergency you can withdraw at least up to 50,000 rupees out of your savings within a minute.
Okay, so you're saying there are mutual fund investments that you can just go out and withdraw as if you're withdrawing from a savings bank account.
Absolutely correct.